All right, hello everybody, and welcome to Reimagine V14. This is our university edition. If this is your first time joining us, welcome in, and if not, welcome back, and thanks for tuning in. We've interviewed over 600 projects, teams, and thought leaders in the blockchain crypto space. Our goal really with Reimagine is to educate and inform all, including those that are new to crypto, longtime hodlers and industry professionals. So make sure to subscribe below to keep staying informed and enjoy what we have coming up for you today. So today we actually have a new guest. The team has participated and supported us in the past. I'm excited to have what we have in store for you today. Kuwar Nagpal, ecosystem development from OpenOcean. Kuwar, how you doing?
I'm doing well. How are you?
Good, good. Thanks for taking time out of your day to join us.
Sure.
I know you're super busy, but we appreciate it.
Yeah,
so,
thank you. I'm glad to be here.
Of course, of course. So, first of all, I want to make a note that OpenOcean, your team actually has supported us for for multiple Reimagine events as our sponsors, supporters with panels, guest speakers. We appreciate that. And your team has always been keen on universities and students and clubs, through education and knowledge and kind of spreading the word there. So again, glad to have your team back. Appreciate your support moving forward. And as I mentioned at the top of my intro, this is the university edition. Our focus this time around was to invite student blockchain clubs or our partners to come ask questions and discuss groundbreaking new technologies with some of the most influential, business leaders in the industry. So I'm glad to have them in our company today. We've been MouseBelt, our company has been working with, students for the last 5-6 years, 80 plus student blockchain clubs and organizations across multiple continents, providing support in a variety of ways, from internships to office hours, sponsorships, investments through our accelerator. So today we have 2 clubs joining us. We'll go ahead and make an intro. Dave, go ahead and kick us off with your club, who you're with, and what school you're coming from.
Hey, thanks, Adam. And glad to meet everyone. I'm Dave. I'm co-founder of Yale GSS Blockchain Crypto Club. So basically, we have about 100 to 200 people. We have a diverse backgrounds of people joining us. And the main goal of the club is to really cultivate the culture and to engage students to understand about blockchain crypto better, and also educate people and doing research together, and also incorporate the resources from the industry to engage with students. So yeah, this is really something we're very excited to bring, like blockchain crypto to engage with the campus and the people from diverse backgrounds, to provide internship with students and to get more exposure to students from the industry. So yeah, this is what I'm doing, and we're excited about blockchain. Usually the student is a pioneer, engineer is a pioneer for the blockchain industry. So yeah, this is what we're doing, and we are very glad and looking forward to the talk today. Thanks for inviting.
Of course, fantastic. Thank you for joining us. And then you have a partner here, Cong. To follow up, how many members are in the club, and what kind of expectations do you have for the upcoming academic school year in about 30 seconds?
Okay. Hello, everyone. My name is Cong. Actually, right now I'm the co-president of the Yale Student Club. I work with Dave very closely. Actually, Dave is our great founder of the whole club, and he's our advisor. So right now we may have across different platforms, I have 100 to 200 students, around that number, and we are still growing. We are recruiting new people this year, and we try to expand our club. Also, we are, we expect to find some, close collaboration with the university and also other corporates, because we heard right now, actually, Yale University is looking for building a new center focusing on blockchain and cryptocurrency. We try to see what kind of opportunity we can combine our goal with our university and get better support. Thank you very much.
Fantastic. Thank you. In about a minute or two, Phil Vu from University of Washington. How you doing today? Give us a little insight about your club in about 1 to 2 minutes, and how many members and what do you have looking forward to this upcoming academic school year?
Yeah, thank you, Adam. Yeah, my name is Philip. I'm the lead engineer at the Yale Blockchain Society Club. We are a tri-campus organization spanning over Seattle, Bothell, and Tacoma. And the primary goal for us is to educate, to provide opportunities, and to develop skills to prepare them for the industry. We're looking to help support those looking to further career in blockchain, and to really provide opportunities such as competitions, meeting with speakers, opportunities like this, having interviews, and to really get deep down into the industry and really big protocols.
Fantastic. Appreciate that. All the intros here. Thank you for all taking time out of your day as well. I know you guys are busy with school and all that. So thank you for joining us. So let's go ahead and kick it off. We have a few questions, Kuwar. I'm sure you're ready for them. We'll fire them off over the next 50 minutes. Let's have some fun. So Dave, go ahead and kick us off with the first question, and we'll get into it.
Yeah, thanks very much. So Kuwar, it'd be kind of very interesting to know more about OpenSea. Can you kind of explain to a little bit about what is OpenOcean, and talk to us about what your role with OpenOcean?
Sure. Yeah, so at its core, OpenOcean is a DEX aggregator, right? And what that means is essentially when you're swapping on a given chain, right? Let's say you're transacting on Ethereum, you're trying to swap from USDC to ETH, right? There's not just one DEX, right? There's multiple. You have Uniswap, you have Bancor, you have a whole wide array of different DEXs. Each one has a different amount of liquidity, supports different pairs, and because of just like the randomness and where people are swapping, they also have slightly different prices, right? So ETH may be trading at 1300 on Uniswap, but it may be trading at 1290 on a different DEX. So OpenOcean as a DEX aggregator, when you put in your trade, OpenOcean is going to scan through all the DEXs available on the chain that you're swapping on and route your order through whichever chain is going to give you the best returns for that swap. Whether that is routing your entire order through one swap, one DEX where the price is lowest, or whether, if you're trading really big, the best opportunity is going to be splitting your trade across multiple DEXs. So in essence, that's the very core of OpenOcean. It's making sure that you can just trade on OpenOcean to find the best price for your swap. And we're on 16 different blockchains. So we support basically every blockchain and every major DEX on those blockchains. So it's a little bit about OpenOcean. And then I know you also asked about my role specifically. So my role is on the ecosystem development team. And the purpose of our team is to make sure that, first of all, we're integrating the most quality liquidity sources, right? Because we want to make sure whenever we are adding a source to our algorithm, right? Obviously that adds a little bit of time to the swaps. We want to make sure it's always quality and it's always worth considering. Second, we also want to make sure the partners that we integrate with are going to be successful in the long term, right? Because it's not very useful for us if we spend all the man hours to integrate a DEX and then 2 months later that DEX is like underwater and they're shutting down. So our job on the ecosystem development team is to first scope out quality partners to integrate with, not necessarily DEXs, but also partners like MouseBelt. And on the DEX side, we also want to make sure that these partners that we integrate with are successful and that we can keep a healthy relationship open for the long term.
Cool, thanks, Kuwar. I'm also kind of curious, what are some of the big challenges within Web3 like ecosystems that you guys might be facing?
Sure. So specifically from the perspective of OpenOcean and my team on OpenOcean, we think the biggest problem is kind of like the fracturing of liquidity, right? Because the biggest attraction or the biggest like sub industry on DeFi on chain is DEXs, right? Swapping, being able to switch from one token to another. So liquidity fragmentation is kind of like is a pretty big issue and is the one that we seek to solve, right? So regardless of where that liquidity is, we want to be able to route trades through it and not have to worry about the size of your trade or the depth of liquidity or even where that specific liquidity is. So that's kind of the big issue that we solve here at OpenOcean. I think there are issues that are present in the broader industry that we don't specifically focus on, but I think those are out of scope for right now. Those are kind of like my personal opinion, but yeah, at least for OpenOcean, I would say it's liquidity fragmentation.
Yeah, that's helpful. I'm also kind of wondering, right now it's a bear market, so I'm kind of wondering how do you manage growth in bear market, and also how do you guys engage with your community in the situation right now?
Sure. So Yeah, like you mentioned, the market is kind of in a tough spot right now. So keeping up growth numbers is pretty difficult. So for the moment, we do put a lot of effort into growth. Like I said, specifically on my team, we try and make sure our partners are successful. And part of that is we engage in like co-marketing with them, like joint events. We have different AMAs frequently with all of our DEXs to kind of merge our communities together. So we get some of their users, they get some of our users, and we both grow a little bit. On top of that, we also run a bunch of events on our own Discord, trying to keep our own community engaged. Like we run different like weekly events, whether you create content for OpenOcean or you like spread the word or you even just swap on OpenOcean, you have a chance to win some prizes, which keeps people engaged a little bit more. And also one of the bigger things we released recently was our referral program, right? We've seen referral programs do pretty well generally, not only just in DeFi, but across, just normal Web2 stuff as well. Referral programs are really popular. So we use our referral program to just give people some rebates, some gas fee rebates, right? So if you swap on OpenOcean, your referral swaps on OpenOcean, both of you get like some of the gas fee back in the OpenOcean token. So all these little things, at the very least, even if we can't achieve growth, which I mean we have been achieving growth, but even in the worst possible case scenario, we at least keep some core users that are going to keep spreading OpenOcean. And when the bull market comes back, we'll have a lot of like dedicated community that's willing to put the word out for us and kind of help us out on that front.
Thanks, Will. Adam, I'll give it to you.
Yeah, great. Some good insight there on OpenOcean, kind of how you guys grow in the bear markets and some of the challenges. Philip, we'll kind of kick it over to Washington here to ask a couple more, and go ahead and take it away, Philip, when you're ready.
Yeah, so how one question is explain why OpenOcean works across centralized finance and decentralized finance.
Sure. So we have moved a little bit away from the CeFi angle like lately, just because there's a lot to focus on in DeFi. But the reason that we want to keep it around is because, first of all, like it's a unique selling point of OpenOcean, right? So if you look at other DEXs and DEX aggregators, right, they don't really integrate CeFi. And the thing is, with CeFi, like that's basically like 90% of people's on-ramp, right? Like you're not going to get into DeFi without starting at CeFi, right? Not only that, but if our goal is to give our traders access to the deepest liquidity, oftentimes that liquidity is found on CeFi, right? So, if you're a trader and you want to trade like $1 million of ETH, like you can probably do it on chain, right? But if you're a really big trader and you want to trade $100 million of ETH, the best way to do that is not going to be through DeFi, just because the liquidity it's simply not there, right? Realistically, like we would love if we could route that whole trade through DeFi and give all those fees to liquidity providers, but realistically, it's going to be pretty tough to do that. So integrating through CeFi helps us get to our core goal of getting our traders the best prices, and also just makes the UI and UX a lot easier, right? Because most people are coming from CeFi. So if we integrate with CeFi and OpenOcean can be that like first stop, like your first stop into DeFi, it gives us like a really strong community and a really strong like ground zero for people to engage in DeFi with.
Yeah, great. Another question would be, there are a lot of competitors in the space. What are some of the features OpenOcean offers versus other aggregators?
Sure. So I would say one of our biggest selling points is like that we offer that our DEX aggregator, our core product is a zero fee product, right? So the only fees you're paying are gas fees and then the fees for the underlying DEXs, right? The 0.3 fee for volatile assets or the 0.04% for stablecoins. So those aren't even going to us, those are going to our underlying DEXs. So our actual swap product is completely free, which means that we almost always have the edge on pricing compared to our competitors. And even if the zero fee is not enough, our algorithms actually it's something we spent a lot of time on, and it's something that has been proven over and over again to edge out our competitors even without the fee. So that's even something like both Curve and I think also Synthetics have like tweeted about, right? Like they compare 1inch and they compare OpenOcean for the same exact swap, and OpenOcean has come out on top like for multiple times, and it usually does. So we have better pricing on just finding that swap, and on top of that, we don't charge a fee on the swap itself. So OpenOcean basically always has the better pricing compared to our competitors.
Sounds great. Sounds great.
Mhm.
And even back to Adam.
Yeah, no, good questions. And I think
Mhm.
a lot of that swap you're talking about, Kuwar, goes with your integration partners, things that you're obviously focused on as a role, making sure you're working with the right people. Because it could take a little while to even just get integrated with chains. You guys are across 16 chains. So I think kind of the competitive advantage started early on when you started forming these relationships, ecosystem, right, growth, and kind of what you've been mentioning over the last
For sure.
few minutes.
Yeah, because I mean, really, like as a DEX aggregator, right? If there's no quality DEXs, like we don't have a product. So the competitive edge does start, like you're saying, it starts with finding these DEXs that are willing to work with us and that we would be happy to work with. So yeah, for sure.
Great. So we'll kind of let's get Cong in here for the next couple questions. And you brought up, Kuwar, interoperability, and again, you just mentioned you're across multiple chains in this multi-chain world. I think the next question is go ahead and ask 3A, Cong, and we can take it from there.
Hey, I have a question with regards to the interoperability. How do you manage the UI to UX? I mean, to onboard more users or developers?
For the UI, like we actually like released a new UI upgrade, I think 1 or 2 months ago. It was really recent, and we basically redid the whole UI from scratch just because OpenOcean has been around for a while now, and we've kind of learned what our users like and don't like, and of course learned from how other like industry leaders and other protocols are doing UI. So we refreshed it and we made it like really, really simple, right? So if the purpose for us is to be a one-stop shop for trading on whatever chain you're on, we need to make sure it's going to look, how to say, it's like feel similar regardless of what chain you're on, right? So our swap UI looks pretty similar. I mean, it looks identical on regardless of the chain. And we just have a drop down to select your chain. And then once you select your chain, everything looks the same. And then you click on the the token selection, and we manually curate all the tokens that people are most likely to swap. So it's always going to be very easy to use OpenOcean just because we know UI is going to be the most important part. Because when it comes to trading in general, right? It's not like people are seeing DEX aggregators and then making the conscious choice to not use them, right? It's not like people are saying like, I'd rather pay like 10% more for ETH, right? The issue is that people are only sticking to what they find comfortable, right? So of course we want to make OpenOcean, the UI, as comfortable as possible. So when people see it, they realize like maybe learning the UI is worth the bonus returns, and we want to make that learning curve as low as possible.
I see. Also, I have another question. Like for those chains, like how do you choose which chain to deploy on? Like what's the primary considering factors?
Yeah, so obviously first and foremost for us is going to be like popularity, right? We want to integrate chains that people are actually going to swap on, because ultimately we are a DEX aggregator, which means we want to attract volume. So for the chains we expand on, we prioritize chains that are going to get us the most volume, right? So of course we integrate on all the major chains like Avalanche, Polygon, Ethereum, Binance Smart Chain. And other than that, other chains that become popular have like fractured liquidity are things that we target. So just where the volume is going to be and where we're going to help out the most amount of users.
For me, how does OpenOcean manage security with all the recent hacks? DeFi is very, I guess, scary space, and
yeah,
how do you guys approach security?
Yeah, for sure. And that's a question I like to answer just because I think like we have a really good stance on it. Simply put, like OpenOcean's focus on security comes from the fact that we don't even like hold user funds, right? So when you're a DEX, like you don't provide liquidity on OpenOcean, so we don't hold funds from liquidity providers. And when you swap on OpenOcean, the tokens are in your wallet one block, and then they're in your wallet the next block, right? So there's no point of vulnerability there for tokens to be stolen from OpenOcean. And even our limit orders, right? Most platforms that support limit orders, when you place the order, they will take the funds from your wallet and hold on to them until the order is ready to be executed. For OpenOcean, we don't even do that. We just unlock the tokens from your wallet. We get spend permission. And then only when the order is ready to be executed, again, the tokens are in your wallet for one block, and then they're in your wallet the next block. So our focus on security comes from the fact that, of course, we write smart contracts that are audited and audited from the best in the industry. But even without, if we didn't have the most secure smart contracts, which again, I say we do have the most secure smart contracts that are audited, those funds are never vulnerable on our platform because they're never on our platform in the first place. So yeah, like if you don't have to hold user funds and you can keep them in the user's wallet, there's no reason not to. And that's something we can try and build around, focus on, because you're right that, DeFi has been a pretty adversarial space, especially in the bear market. So making sure that, you're taking every precaution possible, whether it's audited smart contracts or never having funds in the first place, is very important to us.
Yeah. That makes totally sense. So my next question is, how is OpenOcean composable? Like, is it a DeFi logo? How should developers look to use your protocol?
Yeah, so it is very composable, right? We make it pretty simple. We actually have our own SDK released and our own API. So all of that stuff is pretty readily available for developers to integrate with. And it's actually really advantageous for developers to integrate with, because, if you're making, if whatever protocol you're building or whatever application you're building needs to perform a swap, it's going to be very simple to set it up through OpenOcean, because you just route the swap through OpenOcean and then you can forget about it, right? Versus if you say are swapping kind of like an exotic pair, if the liquidity incentives change and it moves to another DEX, well, all of a sudden you have to rewire your application to switch from DEX A to DEX B. Whereas if you use the OpenOcean SDK or OpenOcean API, nothing changes for you. We route the swap on our own. So it's pretty composable. It's pretty easy for developers to use. And of course, we also have our own developer team that can help people integrate. Because like I said, part of being on the ecosystem development team is making sure everybody who wants to integrate with us has a really easy time doing it. So we have the resources and we have the people. So yeah, anybody that wants to is able to pretty easily.
Yeah, appreciate that.
I think maybe I can ask one more question. Is that okay?
Sure. Yeah.
It's been over half a year since the 2021 bull market, the peak. I'm wondering whether there has been a large reduction in the amount of yield farmers. How do you think about that?
You mean the total amount of yield farmers across all of DeFi?
I think you can divide it into two parts. One is generally speaking. Second is related to your platform. What do you think about
Sure. Yeah, so I mean, it's no surprise. You can look anywhere, swap volumes are down across the board, whether you're looking at CeFi or you're looking at even Uniswap, right? So swap volumes are definitely down. And in terms of yield farmers in general, I mean, also down, right? Just in general, crypto activity is way down, right? Even TVLs dropped from 250 billion right now to about 50 billion. So there's a lot less yield to go around, and that coincides with a drop in yield farmers themselves. So for sure, yeah. One thing to remember is that if you believe the bull market will come back, which I think everybody here does, everybody listening probably does as well. These are kind of the best times to be yield farming, right? Even if the yield may be 7%, 10% right now, if you're accumulating ETH with that yield, once ETH, if it pulls a 5x, that yield retroactively becomes a 45% yield. So it's important to remember that the yield can change retroactively. But yeah, like you mentioned, it's no doubt that stats are down across the board, regardless of the type of platform you are.
Yeah, thank you. That's very useful suggestion, actually.
And coming back to me, I'm just asking about how the future looks for OpenOcean, perhaps things on the roadmap. What does the future of OpenOcean look like in 2023? Any new products or services such as SDKs, APIs, etc.?
Yep. So for the SDKs and APIs, I don't know, not too exciting products there. We just want to make sure they're stable and make sure they work optimally. So of course, those will stay updated and ready to go. But for the new products on OpenOcean side that are more user facing, one thing, like I mentioned, our swap product is free. So we do need to find other sources of revenue if we want to keep the swap free and keep our prices really competitive. So on that front, we're developing more aggregators, right? Because we want to make OpenOcean not just a one-stop shop for trading over DEXs, but trading other products as well. So we have we are making like an NFT aggregator to aggregate NFTs from all sorts of different marketplaces on all chains. And we're also making a derivatives aggregator, right? So if you're swapping on, if you're trying to swap a derivative, like we'll be able to find you the different prices, especially because prices for derivatives vary a lot more than spot prices. So we're going to be aggregating those as well. And that's obviously going to bring us a little bit more revenue between the NFT aggregator and the derivatives aggregator. Further, another thing that we have coming out relatively soon, I mean, I can't announce launch dates on any of these, right? Because there's, still an active development. We're also working on cross-chain swaps. So it's going to solve that liquidity fragmentation even further if you can swap across different chains, right? So if you're swapping on Avalanche, you want to swap more than the liquidity that's available, we can reach into Ethereum and grab liquidity from there. So
what does that what does that look like technically? Like the integration aspect, is that pretty difficult, time consuming? Does that require bridges? Is that native? Maybe you could touch base on that because that's pretty cool.
Sure.
I think OpenOcean at the moment, the aggregators on one chain, correct?
Like
in that network, and now you're going to do cross swaps across networks, which is pretty cool because I think that goes back to the UX in terms of liquidity and somebody not needing to maybe switch across networks and getting the best price and potentially getting more users excited. But technically, yeah, is that pretty tough to kind of do?
Yeah, for sure, it is pretty tough. It's something we've been working on for a while, and it's kind of like I would say in terms of DEX aggregation, kind of like one of the more like end game products, right? Because once you have cross-chain swaps, you kind of like instantaneously unlock liquidity from all of DeFi, basically, right? So instead of just having the liquidity on one chain, like you said, because right now we can only aggregate on the same chain, you've unlocked liquidity across 16 different chains, right? Across 20 different chains once we integrate more. So for DEX aggregation, like the cross-chain swaps are like one of the end game products. And it does depend on bridges for sure, because obviously, you need to bridge funds across different chains to actually swap them. So we are looking at several different bridge partners, especially because, one of the questions earlier was about security. That's like, something we have to put a lot of focus on just because most of the biggest hacks, even if they're not the most frequent, have been bridges, right? Like we saw the Nomad bridge on Evmos get hacked and like basically the entire chain became worthless once USDC was like 1 cent. Same thing on Harmony, right? The Harmony bridge got hacked. Their chain basically became worthless overnight. So we are looking for quality bridge partners when we make these integrations, just because, like even if we can get past the hack, like it ruins your reputation, right? Like Harmony and Evmos both got past their hacks, I believe. I'm not actually sure, but either way, like nobody wants to use those chains anymore, right? Because their reputation ruined. So we want to make sure we're moving slowly to make sure like our bridge partners are secure. So yeah, it's a challenge technically, and it's also a challenge like logistically to make sure that we're making these secure connections with people and our product is going to work how we expect it to.
Yeah, I personally also think that's pretty innovative as well, especially on the UX, because like when people go on CeFi, especially like Coinbase or beginner platforms, right? They don't have that like dealing with multiple chains. Are you on Phantom, AVAX, Ethereum? But instead you just buy the token. And I think if you just that approach for that DEX aggregator is super amazing, and compared to all the other competitors who haven't actually reached that as well. If you guys are the first to be revolutionary, at least on that side.
Exactly. So like I mentioned before, our ultimate goal is to be the one-stop shop and to make it as easy as possible. So if you can just come to OpenOcean to swap whatever you want, wherever you are, right, whatever chain you're already on, it's going to be ideal for a lot of users.
Do you guys have a time frame for that? Like, or is it just the 2023 or just in the future?
I actually don't have an exact time frame just because I'm not heavily involved with the development, but I know it's still like under active development. So I mean, it's not like coming out within the next couple of weeks or anything. So
it'll be a while.
Yeah, it's still being worked on.
Right.
But yeah, we have plenty of time in these kinds of markets. So whenever it comes out, it'll be ready for the next bull run.
Yeah, beautiful stuff. I'm also kind of curious, talk about, I think you guys are very innovative. Kind of wondering, what do you think will be crypto next big thing? What kind of innovation you guys will be thinking? Will come
Mhm.
from actually 2020, bear market, although it's
Yeah.
kind of hard time, but just what do you guys think about it?
And I think in general, maybe for OpenOcean, but in general, like
Yeah.
what's kind of the next big thing that you see, right? We've gone through the DeFi
Yeah.
cycle, the NFT cycle, the
Yeah.
DAOs. What are you kind of seeing trending?
Yeah. So personally, I mean, obviously, like it's not like OpenOcean has an official stance on this, but personally, right? I think one of the bigger things we're seeing is kind of like the integration with real world assets, right? Like we've seen the rise of platforms like, well, like TrueFi, Maple, Clearpool, all like lending under collateralized to different institutions. So that's, I mean, obviously it's risky, right? It's under collateralized lending, but on the other hand, it's lending to, and I don't know if you can call a company a real world asset, but it's companies that are doing things, right? So it's focusing in on that, like that real yield that people have been asking for lately, right? Ever since the bear market started. So real world assets, things like tokenized real estate, I think is going to be pretty cool. So yeah, things like that, anything that can bring like real assets on chain, right? Because you even see Chainlink has recently announced like huge upgrades to like their scale and the kind of things they can put on chain. So more integrations between DeFi and the real world, I think, are going to kind of be that driving force for the next, I guess, the next big ultra narrative, right? Both real world assets and real yield combined together.
How do you? So I know we talked about a lot of OpenOcean, kind of the product, the services, and you kind of touched a little bit personally. We want to hear a little bit more. Like what fascinates you about crypto, and how did you actually end up in the space?
Yeah, so I mean, I've been in crypto for quite a while, like 2017ish. I kind of lost interest for a year or so during like the major long crypto winter. But I mean, what attracts me to the space is kind of, I mean, overarching is just kind of like this. I would just like democratization of finance, because I mean, on a base level, I think crypto is cool, like the digital cash. But what really pulls me in is like this ability to take different financial products and make them accessible to everyone, right? Because if just looking at even what we take for granted today, like Aave, right? Just like basic, very, very basic lending. Like if you want to do that with like your stock portfolio, right? Like these companies are going to ask you, right? Your minimum deposit is going to have to be like 100,000 of stock, and your minimum loan is going to be like 50,000. So Aave, obviously there's no minimum, right? You can lend a penny and then borrow half a penny if you wanted to. So just being able to democratize it like that, and not only just the lending, but give the yield to people who are providing that liquidity, I think is really cool. Because I mean, if you think about it, like as an individual investor, what are your options for yield, right? You either buy stocks, you buy bonds, or you take other really, really sketchy investment routes. So if you look at DeFi, all of these different products that we have in traditional finance, we can emulate on chain and kind of give people a lot more flexibility in how they want to earn on their savings.
And how do we reach? You're talking about like unbanked, and you're talking about like other markets, right?
Right.
Other continents, providing accessibility to these instruments.
Yeah.
How do you think we onboard the next 100 million users? And everybody's trying to figure it out. It's a fun question, but you guys are targeting,
sure.
like you guys are providing kind of a service that in the long run will ideally do that. You probably get in your app and you can swap assets across chains. Nobody knows that what chain you're on, right? You don't have to worry kind of about the blockchain. So how do you see us, since we're in the industry, onboarding the next wave of users?
Yeah. So one thing that I think is interesting, right, is there's kind of like this split between people in crypto, right? There's this, what do they call it, like the DeFi mullet, right? And they call it the DeFi mullet, right? They say it's like
Never heard of that. I never heard of that.
So basically, it's the idea, I mean, you've seen a mullet, right? It looks like regular hair in the front, but it's long hair in the back. So they're saying it's basically looks like regular finance in the front, and the DeFi is like the mullet, right? It's like in the back, nobody actually sees it until you're already in. So a lot of people think that's the approach, right? What it's going to look like regular finance, but it's using DeFi in the background. I think there is a growing idea, and I'm part of it as well. I believe it's not actually going to work like that. Like people are going to use DeFi and know they're using DeFi. So I think what's going to make it really attractive is when we're able to make that seamless, but also give people the education they need to make DeFi usable, right? Because ultimately, we don't really want to make it so people are blindly using it and they're not really knowing what's happening. Ultimately, we want to make people know how to use it and know what their opportunities are and kind of know what the benefits are. Because if you know what the benefits are and you're personally seeing those benefits for yourself, you're gonna want to use it and almost like advocate for it, right? Like if you just look at people that are holding Bitcoin, right? It's not like they bought it as an investment and they're kind of like blindly holding it. Well, a lot of people are, but if you look at the most vocal ones, it's they understand Bitcoin, they understand the vision, they understand the benefits, right? So I think that's kind of how we're going to get DeFi to be like really popular, is by getting people to experience it for themselves and kind of like advocate for it in a sense.
And we talked about users, onboarding users.
Yep.
What about in general on the developer front? Web 2 to Web 3, I'm hearing Web 2 and 2.5, right, to kind of transition users into Web 3. But technically, how do you see us, allowing? Are there still a lot of barriers in terms of resources, documentation, libraries and SDKs? Obviously that will come, but how do you see, I guess, more of the developer growth?
Right.
To get more, because we work with students, and so some of the students obviously know code, but they kind of they have their perspective on what they're learning, and most of it's not around like cryptography.
Yeah, for
and,
sure.
Maybe not just system, but how do we onboard like those devs? And is that going to require more work? Like I said, in terms of resources, libraries, SDKs, to have them, not focus so much on the infra, but just build as people have, the evolution of building a website. Now it's like drag and drop and it's all easy, low code, no code.
Yeah.
So how you kind of see that trending?
So I think well, first of all, I think development is split up into two aspects when it comes to blockchain, right? Like you said, there's the infrastructure side, and then there's the actual like application layer, right? So for the infrastructure side, which I think is really important, right? Because without infrastructure, you don't have an application layer, and especially when you're bringing up questions like sensory transactions with Ethereum, I think it requires a lot more like innovation on that infrastructure side. And I think the way to accomplish that is, what we're doing now, right? We're engaging students, and you guys are running these awesome clubs at your universities to get these people interested while they're still in school, and maybe in the future go on to do like further research in the industry. So I think on an infrastructure level, it's pretty important is to be engaging these young minds who are going to be able to produce brand new ideas the world's never seen before. For the application layer, I think the biggest push right now is kind of like the risk, right? Because if you switch from your comfy Web 2 job to Web 3, right, there's a chance your product it fails and you're going to be unemployed in like a year or less. So the risk is kind of like a big turnoff. And I think also like the like the finance, right? Because developers ultimately go where the users are because the users are bring money, right? So I think if we can figure out better ways to get developers paid, because right now, like the majority of it depends on like selling your treasury and then paying developers with it, which is, less than optimal. So I think if we can find ways to get developers stable income and kind of, mature the industry a bit and kind of make for like organizations that have like better longevity to them, I think that's going to be a major pull. Because we have a lot of developers coming over just because they see like, there's money in crypto because there's users and there's a lack of application. So like, if I build the right application, I can make money. But a lot of the like really, really talented Web 2 developers, have spent, 15, 20 years in Web 2 and don't really like want to switch, right? Because like, what's the point in making the switch to a really risky industry if I have a fantastic job in Web 2? So yeah. And lastly, on the thing you mentioned about like documentation and stuff, I think it's definitely a little bit lacking just because it's a really young industry. Like my background is in software, so even I tried my hand at developing for Web3, and it's pretty difficult. The amount of resources are pretty limited compared to if you just want to learn how to build a website or something like that.
Yeah, no, fantastic. Thank you for that.
Yeah.
In this multi-chain world, you're working across all these 16 chains.
Yeah.
How do you personally see the growth of these networks? Are they all 16 going to be here forever? They're going to be more? Is this going to consolidate?
Yeah, it's kind of a more difficult question, just because it's hard to say what's going to happen. It's kind of hard to project the kind of innovation we're going to see in the future. I could see it going down two different paths, right? Either all these networks are going to eventually consolidate, right, and we're going to see a lot of the traffic consolidate into maybe 3 to 5 different networks, or we're going to see more networks pop up, but each of them are going to have like their own specialty, right? So we've seen, if you just kind of look at the landscape right now, most of the chains are pretty well rounded. But if you look at like Ethereum, it's kind of like the base chain, right? There's a lot of liquidity, and it's kind of where institutions stay. If you look at Arbitrum, it's a lot more like derivatives focused, right? You have synthetics, you have GMX, you have DopeX, and if you look at Polygon's like the business chain, right? They had like their recent announcements like Starbucks, NFTs, and like Disney, things like that. So that's one route I could see it going down. It's either, these chains become focused on the specific avenue of business they want to do, or we just see all of them consolidate into like one giga chain that comes out. It's got like the perfect infrastructure, the perfect application layer. So we'll see. I think for the near future, it's definitely going to be like fragmented, and chains are going to want to figure out who they want to be. Different organizations are going to start their own chain, but I think moving forward we'll see that kind of mature and either specialize or consolidate.
Did you say Starbucks NFTs?
Yeah.
Yeah.
You hear about that?
Well, yeah, no, it's interesting. And
yeah,
one of the things recently, I was reading was like Starbucks is kind of a fintech bank.
Yeah.
In terms of they have the most assets in the wallet, like billions, I think, or whatever it is.
Mm-hmm.
They also have people using a wallet, their app, uploading money. And now they're kind of incorporating NFTs. And it's just, they've kind of been innovating over a period of time. First with, kind of on the fintech side. Now they have the the internal infrastructure set up. And their users are now being, trained a little bit. And it's just funny to see that Starbucks is kind of leading that way.
Yeah. So it's really, and it's like a coffee shop, right? But like once you actually dig into their financials, it's like all the money they get, they just like they start earning yield on it. It's exactly like we do on chain. So it's pretty funny that this coffee shop ended up being the most like innovative financial technology leader.
Yeah. Did you guys follow that, or any insight here, Cong, Dave, or Philip?
No, I have actually complete experience with it. I think it's super funny that you mentioned the correlation, because if you really think about it, I personally use the Starbucks app and I deposit money and I kind of keep it there. And it is just a wallet and it really incentivizes you to put in money, because there's like a bunch of UX that kind of keeps you in there. And yeah, I see the correlation. It's really funny that they could actually utilize it in a way that they're already kind of having their products out like that. So really funny correlation from my end.
Yeah, and I think that's kind of what I was saying earlier about like, not believing in the DeFi mullet, right? It's not like you're not aware that you're using the Starbucks app, right? I think once we perfect these chains, it's like you're gonna be aware that you're using like Arbitrum, you're gonna be aware you're depositing into Aave, and you'll just kind of know what all of it means with really smooth UX.
Perfect.
I have a question
Yeah.
from my end.
We have about 6 minutes left. Go ahead and ask away, Philip. Anybody?
Do you think there will be a future where we have larger layers on top of these platforms? So like Aave, we have a more decentralized community where maybe we build better UI on top of these DeFi protocols, like how OpenOcean is building a DEX aggregator on top of DEXs, right? Do you think the community will scale large enough to build out these layers?
For sure, yeah. So I mean, when you think about it, all these platforms are just smart contracts, right? So technically, you don't even like need the Aave website, right? So you can build whatever you want. If you want to build like a native iPhone app that imports your wallet and it's just like the Aave app, that's definitely something you can do. So I think in the future, like we'll definitely see these like how I say, like localized like wallet apps. I think even like that's happening now. I think like this morning I saw something about Robinhood releasing a non-custodial wallet, and they'll have like different DApps built into it. I think Coinbase is doing the same. So definitely we'll probably be seeing these focused apps with a wallet in it that integrate with, you know, curated DApps.
Yeah, and another question of mine, kind of a completely different question, but
Yeah.
from a business standpoint for OpenOcean,
Mhm.
how do you guys treat the being free business, and do you guys see it going long term? Because I think that is a bit tricky to kind of play,
For sure.
because you guys are running a business after all, and
Mhm.
you guys have to make money. So yeah, curious
Yeah.
on that point.
Yeah, that's a good question. So for sure, you know, like I mentioned, the swaps are free, so it's not something we make a lot of income off of. But like I mentioned, the other products as well that we're going to be actually, you know, charging fees on, making income like that. So right now we're focused on expanding our DEX aggregator audience so that once we release these products that actually charge fees, we have a strong user base for them, right? Like, I mean, one of these AMAs I was at, they compared our DEX aggregator to like, you know, the $5 Costco chicken, right? So basically, you know, you come in, you go to the back of the store, you get this chicken that, you know, that Costco's losing money on, but you're already in Costco, so you're going to buy a bunch of other stuff that they're actually making money on, right? You might stop to buy other groceries that, you know, Costco obviously makes a profit. So it's kind of like, you know, in a weird way, what we're going for. So you come in for the DEX aggregator, you realize OpenOcean's a nice platform that you can get good returns on for 100% of your swaps. And then eventually you might come back to use our derivatives aggregator, NFT, cross-chain swaps, things like that, where we actually charge fees and make a profit on.
Yeah, that is an amazing comparison. Yeah, thank you for that.
Yeah, thanks.
And I have a question actually,
Sure. Yeah.
related to the Starbucks story. It just reminds me, I also use, you know, Amazon, they have gift cards. I'm just
Yep.
wondering about those tech giants. Do they have plan to plunge into the blockchain field? Or if they do, will that kick out other, you know, smaller business, like they don't have enough capital to combat with those
Right.
big giants? What do you think about that?
Yeah, so we are seeing a lot of these companies expand into blockchain. Like, you know, if you just look up on like a LinkedIn search, you look up blockchain, you'll be like, what? Like, MasterCard's off, like hiring a senior blockchain manager, Fidelity, Starbucks, of course, like they're all hiring for blockchain roles. And it's kind of too early to see what exactly they're going to do with it, just because, you know, obviously these big companies want to take it really, really slow. So it's hard for us to see what exactly they're trying to do. But the biggest thing is, you know, they can come into the blockchain space, but they're not going to be native to the blockchain space. So they might bring users with them, but I think, you know, maybe this is like a little bit of copium, but I think DeFi natives and DeFi native companies are always going to be offering the best products available. And eventually, you know, if like a Starbucks, a Walmart, a Fidelity brings along with them like 150 million new DeFi users, that's also 150 million new DeFi users that can be using DeFi native apps, right? So they can bring customers with them, but it's not like these customers necessarily have to be loyal to them if, and like I think if and only if DeFi natives are offering a better product, which I think is always going to be the case.
So basically, you think the market is big enough to incorporate those giants?
Exactly. Yeah.
Okay.
Yeah, and a lot of them, oh yeah, are already in the space. MasterCard is a partner of ours, and Anheuser-Busch is looking into it. Rolls-Royce, you know, ING Bank, you know, the list goes on. Last question, Dave, if you want to ask, go ahead and fire that one off.
Yeah, definitely. Thanks for the insight. I'm kind of just wondering, you know, from the student, you know, blockchain, and also from students' perspective, any advice you might have for students looking to get into, you know, blockchain industry?
Yeah. So honestly, like I was not a student that long ago, right? Like actually, I graduated like this past month. So being a student and being in blockchain are two things that go very well together, because, you know, these Web3 is a really young industry, so there's always people willing to train you, which is not the same for Web2, because, you know, as a really mature industry, you're kind of expected to come with experience, and it's not necessarily the case for Web3. I think the best way to kind of, let's see, like get yourself a long-term role, if that's what you're looking for, is to actually just make yourself kind of a well-known community member, right? And it's not like you have to have like, you know, 20,000 Twitter followers, right? I just kind of started a Twitter and started tagging people I wanted to discuss with. I got myself like, I don't know, like 100, 200 followers. And then also was talking on these Discord servers. It's kind of just, interfacing with different people, not only to get to know them, but to kind of sharpen your own knowledge and kind of gain nuance on the industry, right? And once you're knowledgeable and once you're actually, like you can talk about different platforms and you can talk about how they make money, they don't make money, how tokens work, tokenomics, things like that. Like you have a really strong start and you can kind of use whatever skills you have as a student. Like let's say you're a software developer. Once you have the DeFi knowledge and you have the technical knowledge, like all it takes is just like talk to people, ask people, right? Like I messaged, dozens of people on Twitter, dozens of people on Discord asking if they were hiring, taking a look at their roles and applying if necessary. And the cool part about Web3 is that it's not like, you apply on their site and you hear back like 3 months later with a rejection letter. Like frequently, I just like joined like a Discord server for a protocol I liked. I'd look at, who's on top. It says admin. I'd message them and like, are you guys looking for this role, this role, this role? And it's pretty easy to just like scale in, right? Like I started as a, just like community manager, and then I went up to like content writer for different protocols. So, it's pretty easy right now, I would say, to kind of pick up these roles and incrementally scale up to the actual job you want to hold. So to summarize all that and give you a short answer for how can a student, get into Web3, I would say start small and then scale up and make sure you're talking to a lot of different people.
What I hear too is participation, staying active, proactive,
Exactly.
and engaging the communities. That's one thing in the Web3 space. And first of all, it's decentralized, so you can get a job anywhere now in Web3
Exactly.
across continents. One, and then two, it's about being part of that community and engaging. And I've heard so many people either technically like contributing to the code or ambassadors, community ambassadors hosting meetups, which is pretty simple. They provide grants and funding for that, for pizza and beers. We used to sponsor all kinds of meetups for these students, and we still do.
Mm-hmm.
So Kuwar, I think we're running up on time here. I know you got to go. I want to thank Philip from the University of Washington Blockchain Club for joining us, Cong Shin and Dave May from Yale Student Blockchain Club, and then Kuwar from OpenOcean, our special guest. Thank you everybody actually here for contributing and being active in this discussion as well. We have a lot more, schools coming up through this conference, and I want to thank everybody for tuning in and watching this. It's gonna be a long conference and enjoy yourselves. So everybody have a good one, and we'll follow up and talk again. Thank you, Kuwar.
All right, thank you, everyone.